before, but I'm pretty interactive. I'm sure you already realized that in the last 5 minutes. So I probably will ask some questions, and I do understand it's best for all involved to be muted, but if you want to answer in the chat, we can, kind of get a feel for some of the things as we go along. I do have a PowerPoint presentation I'm going to work off of, so I'm going to try and, Laura, is it okay if I share my screen?
I made you the co-host. Can you share?
Perfect. Okay. Let's see. Bear with me while we get it up and running here. Okay. Everybody see everything okay?
Yes, we're good.
Perfect. Okay. So today we're going to talk about the IRS Form 990. And as I mentioned, this is a pretty heavy topic for 8 o'clock in the morning. So if I get too technical or too far off track, just let me know. Just a little bit about me. Oh, I do want to thank Kim and Laura for having me today. As they mentioned, it's great to work with the Chamber and Nonprofit Village. I'm you'll find out, fully involved in a lot of not-for-profits, so it's near and dear to my heart. Oh gosh. Here we go. Just a little bit about me. I'm a principal at our Rockville office. LSWG is the name of our firm. We have probably between 70 and 80 not-for-profit clients at this point. I'm a Mount St. Mary's graduate. I'm a local girl. I grew up in Frederick County and I live in Clarksburg. Again, I love not-for-profits, so any questions you have, feel free to throw them at me. A little bit about our agenda. So first we're going to talk about some of the recent tax law changes that affect you guys and your organizations. We're going to do a little bit about the 990 itself with some helpful hints. The number one question I get asked is, as a not-for-profit organization, my accountant prepares the 990 and they ask me to review it. What does that mean? So I'm going to give you some tricks and some tips on what to look at. And then the last part will be the impact of the new accounting standards on the IRS Form 990. I think as Kim mentioned, you guys are going through your audits probably either now or you went through the December audits and you're looking at your 990s and how do the standards affect the way you report on your 990? And then we'll leave lots of time at the end for specific questions. So the tax law changes, I love this slide. Why do people give? I think it's an important thing to step back and you guys know, do they give because of the tax deduction or do they give because they're passionate about the cause? I'm an optimist. I think everybody gives because they really truly believe in the cause, but we all do like to not pay taxes, right? I mean, really. So one of the things that we'll talk about here is how can an individual income taxpayer benefit from giving to your organizations? So here, I think there's been a lot of talk pre-COVID, right? Everything's going to be either before COVID or after COVID in our discussions today, but that under the new tax law, the standard deduction was much higher than it used to be in the past. So there were a lot more individual donors for your organizations that were no longer itemizing on their tax return, meaning that they could deduct those contributions they were giving to you guys. And so it would be interesting to know, and what I just realized is I can't actually see the chat, but it would be interesting to know if you guys, maybe if you want to unmute for a couple minutes, did anybody have a significant impact before COVID from this tax law change? Like did your charitable giving or your straight contribution lines really decline significantly as a result of this, or were you seeing pretty stable growth?
Yeah, I tell you, we saw no difference whatsoever.
Okay.
Yeah, we didn't either, but it's also because the type of nonprofit that we are, we saw it with organizations that were direct service nonprofits and larger nonprofits because they have many more donors at different levels.
Okay. That makes sense to me. And so it is. The impact of this, I think, really hasn't been felt as much as it could have if COVID hadn't also hit, because what we're finding with our organizations we deal with is that COVID actually increased charitable giving across the board for a lot of them. So this is where your development directors can be helpful. And I know a lot of organizations on this call probably don't even have a development director, or you're a volunteer development director. So when they're out there talking to some of your larger donors, they can give them suggestions like bunching or bundling donations. This is something that's become much more popular with the increased itemized deduction threshold. Because, you know, rather than have a donor give you $1,000 a year, if it makes them, you know, if it's better for them from a tax standpoint, they might want to give you all $5,000 at the end of that 5-year period because they get a larger deduction on their tax return. So this is an option that they could be talking about with donors. Another one, and so I had my tax guys, I like to joke that I play a accountant on TV, but I'm not in the tax world at all. 990s aren't even technically a tax return. But charitable rollovers or qualified charitable distributions are another really great way for you guys as not-for-profits to get donations. So what they were saying is that required minimum distribution. So we all know once we hit a certain age, we have a required minimum distribution from our IRAs. And that money, if they give it directly to a charity, never hits their taxable income. And so they don't have to pay taxes on it. So the gentleman I was talking to yesterday, his parents, you know, who are required to take their distribution, don't want to pay a lot of tax. And so this is how they give to their chosen charities every year. They send them their required minimum distribution. And so they don't also, the caveat here is they don't also get to take a deduction for it, right? Because they're reducing their taxable income. But this is another great option. And you know, just giving donors different options is always a good way to give them to get more for your organization. The other thing is, and I don't know how many of you are set up to accept stock. A lot of places are, and it's pretty easy process to, you know, to accept a stock donation. Stock donations of appreciated publicly traded stock are a great donation. So if anybody is sitting on, and then this is just an example, we won't walk through it, but I will certainly share the slides with anybody who wants them after this. Laura, I can send them to you and you can distribute them if anybody wants them. But giving away to the charity the actual stock that's been appreciated gets them a much larger donation than selling the stock, paying the capital gains taxes, and then giving the net amount to the charity. So again, just another mechanism for organizations to start cultivating those high net worth donors. The CARES Act. So not a huge amount of not-for-profit related activity in the CARES Act. I mean, we're not going to get into the PPP loan, the EIDL loans, or any of the other SBA programs in this this morning. That would be a whole nother session. I'm sure you guys have done a gazillion webinars on the PPP loan. But as part of the CARES Act, there are a couple little perks for donors. A standard deduction on a personal tax return. So if you take the standard deduction in 2020, you'll get to take $300 for any cash contributions. So last year in 19, that was $0. This year it's $300. For donors who itemize, they also get to, they raise the cap on that ceiling of deductibility for charitable contributions. I don't think quite yet this is known to a lot of organizations, a lot of taxpayers, but I do believe when they start doing tax planning with their CPAs in November, December after the election, this is going to be a big thing, because if you don't want to have to pay taxes, all you have to do is donate some money to charity. This is a great mechanism for you guys to increase your year-end giving. And then the last one was the CARES Act raises the cap on charitable contribution deductions from 10 to 25% for corporations. And so that's you know, go after those corporate donations, maybe that you weren't thinking to go after at the end of the year, and remind them that they can deduct up to 25% this year. All right, we're going to jump into the 990 itself here, and please let me know if you have any questions. Just unmute yourself and interrupt. There's plenty of time for us. So I always like to start, why is the 990 important? So as I mentioned a few minutes ago, the 990 is not technically a tax return. It is an information return provided to the government. However, it still needs to be accurate and complete. If it's not, there could be penalties assessed by the IRS. So to the best of your knowledge, you really do need to make sure that everything you're reporting on the 990 is accurate. Also, I think, you know, the world that we live in now, even the non-savvy donors know to go out to GuideStar or the BBB or anywhere else and try and locate a copy of your 990. And so they use it to make decisions on who they're going to give their dollars to, right? Their donations to. So you want it to be as informative as possible. So I just like to remind everybody there are different kinds of 990s. So there's 3 different levels, and most everybody probably files the 990 itself, the full-blown 990, because you have enough income and enough assets to do that. But you also, for those starting up, and I think it was it Guri? You were a new organization, correct, that was just getting started?
Yes, and we had filed for 501c3, but don't have it yet.
Yes, so you would probably file the 990N because your activity is probably pretty low, right? Yes, okay. So for example, in an organization that's just getting started, over here on the left of this slide, again, another busy slide, sorry about that. I tried to circle what was important on it. Anybody who has gross receipts of less than 50,000, the 990N is called a postcard. They only ask for the information on the right, 4 items: the employee identification number, your name, your address, and the website address. And it's through the IRS website. It's actually through a third party, but you go to the IRS website to file it. The key here is there's no late filing penalty on a 990N, but if you don't file for 3 years, the IRS will automatically revoke your tax exempt status. And so probably now, gosh, 7 or 8 years back, the IRS went through and revoked a whole bunch of a lot of organizations' tax exempt status because they weren't up to date. And so that generated a lot of work for people like me to get people, the not-for-profits, reinstated. So there's also a 990 EZ. So that's between the N and the full-blown 990. And a lot of organizations actually fall under this category, but for some reason, and I still can't figure it out, don't want to actually file an EZ. So if you're over here on the left of the slide in the red circle or oval, if you have gross receipts of less than 200,000 and total assets of less than 500,000, then you can file the EZ. And the EZ is a much more condensed version of the 990. So, you know, it will cost you less to have it prepared. There's less information that's available out there on your organization. And I think maybe that's why people don't like it as much. But again, it has to be complete and accurate. So penalties can be assessed if it's not filed timely. And for any organization that has filed late, it's quite a hefty fine. It's $10 a day up to a maximum of $5,000. So that's, you know, for small not-for-profits, that could be a really big penalty. And the last one is the actual 990 itself. So this is for tax-exempt organizations who have gross receipts of greater than or equal to 200,000 and assets of more than $500,000 at the end of the year. All right. So, you know, the IRS Form 990 is very, very long. It used to be a shorter document, but right now it has a core form of 12 pages. And so I think the key for those who are not preparing the 990 but reviewing the 990, and I guess I should have asked how many of you are actually preparing your own or if you had an accountant. But the key is to review those core form pages, so page 1 to 12, because everything else is generated off of the answers in that core form. You know, whether or not you need to file Schedule A, B, all the way to Schedule O, it depends on how you answer those questions. So the key is, that's where when the accountant gives you the draft and says, can you please review, that's where you want to double check that they've answered those questions properly. So my first thing is always check, and this is last year's version, but there were no significant changes to the 2019 990. Guri, this is where you, if you were to file a 990 on your first year, you see that very last box where it says application pending. That's where you would check that box. But this is really important, and I think it's often overlooked. If you have a change of address, you really need to let the IRS know by checking the box. If you have a name change, because a lot of organizations go through name changes, you would check the box here. If the IRS can't tie it back to you, then they might consider it a late filing. If this is your initial return, file it here. And we do see quite a few not-for-profits are not going to make it through COVID. It's unfortunate, but it is happening. And so this is where you would check the box, final return or terminated, so the IRS knows not to look for a return next year and won't assess any penalties for not receiving one. If you don't check this box and you go out of business and everybody sort of forgets about it, the people involved could actually be personally assessed a fine, as well as the organization. You know, members of the board, the previous executive director, and that's one of those kind of scary thoughts. The rest of this information you just want to glance at and make sure that it's still accurate, you know, that we have the right address, the right executive director, the right principal officer. Which brings me to...
What does application pending mean?
So for organizations who have applied for a 501c3 status but not yet received it. Okay. This part, I get a lot of pushback from my executive directors on the signature block, and I don't really know the legal answer to this. I always say conservative's the best approach. A 990 is not considered complete without a proper signature, and the signature must be an officer. And so the IRS has defined an officer as the current president, vice president, treasurer, assistant treasurer, chief accounting officer, or other corporate officer who is authorized to sign. In a lot of instances, that's not an executive director. Kim, you probably can speak to this better than I, but a lot of organizations, the executive director is not an officer of the company. They don't have that authority granted to them. Significant amount probably do, right? Because they're signing, you know, on for debt for organizations, they're signing on for contracts. But my preference, and I do push my clients, is always to get an actual officer. And I generally like the treasurer, because they're kind of then ultimately responsible for making sure the information in it has been reviewed and approved, right? We always like to make sure management is aware. Okay, this is page 2.
I have one question. Would a chief executive officer be one of those that could also sign?
I believe so.
Okay, thank you.
Of course.
Eva, I just wanted to, I'm sorry to interrupt, but you know, one of the things that we also make sure that we advise organizations is that the board needs to see this and review it. So our process is for our finance committee to review, and then it comes before the whole board, and they have a chance, and the preparer, the audit firm, actually sits before the entire board and answers questions. You know, it can be done a lot of different ways, but it's written into our internal controls that the board has to approve this before it can move forward. And we have even held up our auditor with internal questions before. So
Absolutely. And so we'll get there in a couple more slides because there's a question that asks whether your board sees it, Kim. And so I think that really has pushed over the last couple of years. It's pushed us as auditors, and it's also pushed management to get the board more involved in the 990. But that's excellent. A lot of times we see where the finance committee does the detailed questions, and then they send it to the board for global approval, but you're taking it even one step more with the board actually being able to ask questions. So that's phenomenal. On the scale of the board never sees it to the board asks questions about it. So that's great. So page 2 of the IRS Form 990 is a page I think that organizations aren't using enough. So this is your opportunity to talk to the general public about your 3 largest programs, right? So even in the instructions, it says a description of the program service accomplishments that include specific metrics. So Mary Ann, you're from the Housing Initiative. One of your things is probably a ton of metrics, right? We placed 400 clients in homes this year.
Right, absolutely, and we do a very detailed description in this section because this is our sales pitch.
Exactly. So, perfect. You couldn't have set that up better for me if I prepped you for it. This is where you get to tell the world all the good things you do. And so many people have like a one-line explanation. I'm like, no. So girl, with your voiceless animals, your cause, some of the ones that we have, they talk about, the number of animals that they helped this year, or the number of volunteers that they were able to get for a specific project aimed at, endangered species, or, tell the world all about what you're doing. The only opportunity you really have in the whole 990 for that is on this page 2. So that's where I would focus a lot of my time and effort as a member of management, would be getting a good handle on page 2.
I have another question. I'm so sorry to interrupt.
No, perfect.
One of the questions that our CEO has had, and I think I kind of know the answer, but I don't know if I'm accurate, is our filing year. So for this year is 2019. Our fiscal year runs July 2019 to June 2020.
Yep.
And so in that page 2, we've put our statistics for our FY20 fiscal year, but we're reporting on 2019. So there's been questions about, is that the right way to do it? And I don't know if you can clear up any of that.
I can. It is the accurate way to do it. So right here at the beginning on this page 1 of the 990, it says for the 2018 calendar year or tax year beginning, yours is going to have July 1st through June 30. And so that lets a user know that the information on the rest of the return is on a fiscal year basis. So you are completing it accurately.
Okay, perfect. Thank you.
You're welcome. All good questions. You guys are great at 8 o'clock in the morning. The next several pages are the key to determining what forms, what schedules have to get attached, right? So we have our 12-page core form. Page 3 and page 4 are multiple questions. And how you answer those questions is what schedule applies. So you'll see most of the organizations on this call this morning are going to have Schedule A and Schedule B. And that's because you're going to answer yes to this question. Is the organization a Section 501c3 organization? So when we first hopped on the call, I was polling everybody as to see what they were. So you are going to complete Schedule A. And what that is the public support test. So everybody knows as a publicly support, as a 501c3 organization, you have to be publicly supported, meaning you have to be generating contributions from the general public. If you're an organization and you're only receiving money from like Pfizer, the IRS is going to come back and they're going to say, you're a private foundation, right? You were created and you're funded entirely by one organization. So then you would have to do a completely different, it's called a 990 PF. And so they would come in and classify you as that. And how they determine that is Schedule A. Because all of you are also 501c3 organizations, you are generally going to be required to prepare Schedule B. Schedule B is the schedule of contributors. And so that's where all of your donors have to be listed over a certain dollar amount and the amount they gave, as well as the address. And so this is one of those things you really can help your auditors out by giving a really good list of your donors every year to them. Hopefully you have a good donor database up and running. And I know for some of the smaller ones, you probably don't yet, but that is something to invest in as you move forward. A couple other parts of these questions that really apply to most everybody. Number 17 through number 19, Schedule G. And so that's about fundraising. Did the organization have a total of more than $50,000 of expenses for professional fundraising services? A lot of my organizations don't use a professional fundraiser. They don't find it benefits them. They do it all in-house. So they might answer that no, but 99% of them hold fundraising events. And so number 18 would be yes. And so then they'd have to complete Schedule G, which just asks for information about each of the events. Kim, do you guys have a specific event, fundraising event that you hold every year, or do yours vary from year to year?
We used to, and we wanted to get out of the event business. So
Yeah.
Last year was going to be our last event. And then, of course, COVID came along and made sure that we didn't hold an event this year. So we have found another way. We actually have generated more revenue through sponsorships rather than an event. And
that makes sense. Yeah, that makes sense for your organization. But
Yeah.
like for the chamber, I wasn't even thinking about Laura, right? Like you guys make a lot of your money through events. Whether or not they would be considered fundraising events would be an interesting. I'd have to look at your 990. And then the last one was, did the organization report more than $15,000 of gross income from gaming activities? Not so much with probably the organizations that it sounds like are on the call this morning, but some not-for-profits have bingo nights or pool tabs at some of their events, and so they would have to answer additional questions. So this page of the 990 is very overwhelming, page 3 and page 4. It's just a massive list of questions. But when you break them down, do we do this? That's kind of how you have to look at the questions. Do we do fundraising? If the answer is yes, then the box should be checked yes. Do we do gaming? If it's no, then the box should be checked no. And so this is just a little more information I had added about the definition of fundraising. That middle section, fundraising events, we get a lot of questions about what constitutes a fundraiser. And so the IRS actually gives specific information. And I do laugh. Dinners and dances. I can't tell you the last time I went to a dance. I don't know about the rest of you. Door-to-door sales of merchandise. Again, that's just nothing that happens in today's world, but I guess in the past. Concerts are pretty, if you're a local orchestra or a play, carnivals, sports events, auctions. This is a really popular one. Everybody likes to do an auction. Casino nights and similar events. And the key with a fundraising event is that they're supposed to not be regularly carried on or conducted. So, this slide is really just to help answer some questions there. Question 21 and 22 is Schedule I is another schedule where, depending on the nature of your organization, you probably would be able to fill this out. So we do some United Way audits, and United Way is one where this would be checked yes, because they give money out to other organizations. So if you're giving grants to others, you would answer this yes. And then number 22 is, do you give grants to individuals? So over there, Marianne, at your housing initiative, you maybe probably answer this yes.
This may be the first year we answer yes, because we've passed through a lot of grants to individuals to pay their rent.
Yes, exactly. So you must be keeping a good track of that, huh?
Actually, fortunately, we are keeping good track of that. I also have a question while you're at it on number 21. We have some pass-through grants where we get like a grant from the city of Gaithersburg, for instance. And then we pass it through. I mean, some of it is for us and some is passed through to other nonprofits that are providing similar services. Does that count as a donation to another organization?
Well, is it contractually required?
It's contractually required by the city of Gaithersburg. I mean, their grant agreement is to to 3 organizations, including us, where we're all providing,
Yeah.
part of the services of this program. But we're like the fiscal agent, so the money comes to us and then we divvy it up to everybody else. But
I would say yes, because if you think about it, the city would probably record it as a grant or a grant really probably to you, and then you would turn around and record it as a grant to others. Is that how you report it on your financial statements?
Yeah, it's an expense. It's
Yeah.
a pass-through expense. We have income and yeah.
Yeah, so it's a grant, like it would be a grant expense on your financial statements.
Yes.
I would
yes.
say yes to that.
All right. Well, I don't think I've checked that before. So.
Yeah, I'd push a little bit because I think that would be yes, based on those circumstances.
Okay, thanks.
Of course. Any other questions on this topic? Because it is one we get a lot of questions about. But, number 22 is the one that trips up a lot of people because they don't realize that they have to keep track of that when they're giving out information to individuals. But it happens quite frequently. We have quite a few. This is the same section, those 2 pages that are nothing but questions, number 29 and number 30. A lot of organizations get non-cash contributions, right? Probably most everybody here on the call gets non-cash contributions. And so on line 29, this is where if you answered yes, you would have to complete Schedule M. And so that has to be more than $25,000. Market value is the way we determine whether it's $25,000 or not. And it's property other than cash. So right there in the middle, all those words, non-cash contributions include property other than cash, right? Hence the name. Stocks, bonds, securities, real estate, works of art, stamps, coins, collectibles, clothing and household goods. So for, any organization like a mission that's, collecting clothing and household goods, vehicles, boats. I have one organization that gets nothing but boats. That's always fun. Airplanes, food, inventories. I'm sure a lot of your organizations are collecting food, equipment, supplies, books, intellectual property. And so it's as part of the audit, you should also audit, review, or compilation your financial statements. You should be tracking this in some form or manner so that it gets recorded on your financial statements and then gets reported on your 990. I'm sure for anybody who has it, it generally boosts your numbers quite a bit. But it is valuable information, right? You should know how much non-cash contributions are being received. Yes, Kim?
Eva, I can't remember, is it here or is it someplace else? There's also where you're recording your pro bono contribution. So
that's a different place. So services are not captured on this.
Okay.
You're talking about like pro bono attorneys, accountants, landscapers,
Right.
Those kind of things.
which can also boost your numbers.
Yes, a lot sometimes.
Okay.
They are actually, we'll get there in a couple more slides. Kim is very knowledgeable of the 990. You've done a good job. Statements regarding other IRS filings and tax compliances. So this is the next section of the 12-part core, 12-page core form, is making sure that you've captured. This is easy. I always tell everybody this is the easy stuff. Make sure you get the number of W-2s, which you should have copies of. Your 1099s, just make sure you have copies of those, because this is one area where the IRS can do matching, right? Because you have to submit W-2s and 1099s to the IRS so they know whether you sent them 4 or 10. So these numbers should be really, really accurate. And then down here on the left, the last time I gave this presentation, A lot of people didn't realize they had to do 1099s, and I think that's mostly with volunteer organizations. And so I circled here, just a reminder that anyone you pay over $600 for things like rents or services by people who are not employees, prizes or awards, that one we get a lot of questions about, and then payments to an attorney always have to be reported on a 1099. This is one, and this whole presentation is just questions that I normally get from a lot of my clients. So this one, a donor gives a charity $100 in consideration for a concert ticket. And the concert ticket is normally valued at $40. I'm sure a lot of you guys have these kind of events. In this example, $60 would be deductible because the donor's payment was in excess of $75, right? It was $100. The organization must provide the donor with a disclosure statement indicating the amount they can be deducted, right? That they can deduct on their personal tax account. So anytime I go to a dance, I just make that's so funny to me, a dinner dance, but you know, a lot of gala events are held. And so anytime you have a gala event, generally, I think in Montgomery County and Frederick County and DC, where we do a lot of our work, the payment is $150, $200, but the value isn't that much, right? The value might only be $40 or $50 for the event space and the food. So here you would answer yes to that, but the more important part is to make sure that when you send those thank you letters to the donors that you're indicating on the bottom of them how much they can deduct. So for everybody on the call, this is probably the most important section to review, and Kim had alluded to it earlier. These are the questions about what the governing body does and what management does. And so you'll see governing body and management section. Here's where you talk about the number of members on your board. And these questions are key. And a lot of times the auditors aren't even aware of some of this. They should be, but sometimes they're not. Who's independent? The IRS wants to know, and what does independence mean in this regard? That's the question I get asked all the time. And it's the next question. Are any board members related? You know, if a husband and wife have different last names, a preparer, you know, looking at the listing that you provide them with may not even know that they're married. So we tend to ask our clients, does anybody have a relationship with either the organization, a business relationship, either with the organization or with other board members? Because decisions can be impacted by, you know, families. Lots of not-for-profits are set up by families. And so there's nothing that says you have to be independent, but you do have to disclose it here, whether or not you are. Number 4, which I don't have circled, but number 4 is another one that's really important. The IRS wants to know if you're making changes to your bylaws. So if you do make significant changes, there's a mechanism for submitting them with this return that you file, and you should be doing that. I've never seen the IRS come after anybody for not. It's not something that they've enforced, but you are technically supposed to. And then number 5 always makes me laugh. So if you have fraud in your organization, you're supposed to tell the IRS about it right here. That's what significant diversion of the organization's assets mean. A lot of people balk at that, right? Because this is a publicly available document. But to be complete and accurate, you're supposed to indicate yes or no to that question. Number 8, I get a lot of pushback on number 8. Does the organization contemporaneously document the meetings held? So we all know that it's good policy to document the board minutes, right? Everybody on here has a board, and every board is meeting periodically. And so this, a lot of people want to answer all these questions, yes, but the committees also have to be, so A can be very easily answered yes. I think everybody's documenting their board meetings. The committees are the ones where I don't always think are getting documented. You know, so if your finance committee meets quarterly, there should be minutes of those meetings. That's just good general practice, because when there's turnover or when there are questions 5 years later, nobody remembers the details unless it's in writing. And then, of course, you're supposed to keep minutes forever, which we have had to go back with restricted funds as an area where, you know, you can't remember why those funds were restricted 15 years later, or it was too broad. And so you have to go back. Board designated assets is another one, when the board decides to earmark monies for a specific purpose. Okay, we're getting close, guys. Thanks for bearing with me. I know it's a lot of technical information. Policies is the next one that really is something that you guys as management should be looking at. And Kim, here's that section. So 11A, has the organization provided a complete copy of the IRS Form 990 to all members of its governing body before filing the form? Technically, if you didn't email it to all members of the governing body, you really shouldn't answer that yes. But it's very easy to answer it yes, right? In today's world, send them an email. Even if your finance committee is the committee who technically reviews it, after they review it, send it, you know, to all board members. And what we found is really helpful. Give them a due date, right? Let us know if you have any questions by October 15th. And if you don't, we're going to go ahead and file it, right? Nothing says they have to approve it, but they have to look at it, or at least have the opportunity to look at it. I will say this section on policies feels like you should answer everything yes, right? But there is no requirement by the IRS that you answer these questions yes. They feel like these are sort of best practices. And so they, you know, the next couple you'll see, do they have a conflict of interest policy? Most organizations do, at least once they hit a certain size, but like, you know, some of these startups probably don't. Do you have a written whistleblower policy or record retention policy? Once you get to a certain level, you'll have some of these, but there is no penalty for answering these questions. No, you just have to answer them truthfully and accurately. List the states which a copy of this Form 990 is required to be filed. So you should be, all of the Maryland not-for-profit organizations, you should all be filing this with the state of Maryland. Maryland has a requirement of charitable registration. The next one, I think number 18, people get wrong all the time. Is it available on your own website or another's website or upon request? I think, Kim, you deal with a lot of not-for-profit organizations. I think it probably is a good practice these days to have it available on your own website, but savvy users of financial statements know to go to GuideStar. I think, anyway. I think you can probably even Google it, and I think it takes you to GuideStar. So just, again, this is key when you're reviewing the 990s, maybe that your auditors are preparing. Just make sure it's checked appropriately. If you know it's on the website and that box isn't checked, you know, tell them. Compensation of officers, this is another one. So Emily, this is important for you to know because your information is going to be a little bit different because you're a fiscal year end, right? For anybody who's, and it sounds like, Kim, you must be a fiscal year end too if you're just now getting your audit. Okay. So anybody who's a fiscal year end, this is going to be last year's W-2s, right? Because you're not getting a W-2 that corresponds with your fiscal year end. So this information is going to be the 2019 W-2, which is going to be different than what you're reporting on your schedule of functional expenses because that's on a fiscal year end. And that really, and that really throws off a lot of people. Why don't those numbers match? Uh-oh, what happened? Okay. Who should be reported? All current officers, directors, and trustees. Column B asks for an estimate of the average hours per week that everybody is volunteering. An estimate is fine. I think everybody thinks with accounting it has to be a real, true, accurate number. But, you know, if your board meets once a month and the committees meet once a month, maybe they have 2 hours a month devoted to your organization, or 4 hours a month, and so that's a 1 hour a week average. But don't get hung up on the details there. So the financial information on page 9 through 11, this should all come from your accounting system, right? Or if you have audited financial statements, this information should be mirrored in your audit review compilation, or what you're generating from QuickBooks. So that's those are the what I always call the pretty easy pages, because those are just straight off of your either your statement of functional expenses or your statement of financial position. Page 12. So as Kim was alluding to earlier, there is a reconciliation that's performed. And so part of that reconciliation is if you do receive donated services, those are not reported on the 990. So that would be a difference between your audit, your review, or your internal financial statements and the 990. Those get reported on this reconciliation only, because for 990 purposes, they're not revenue and they're not expenses. This is also where you would report unrealized gains and losses on investments. That's not considered revenue to the IRS either. I threw this slide in here. This is my last slide, and then we will do some questions, because lots of organizations don't even realize they have to file with Maryland. And so Maryland does require organizations who are soliciting contributions, which is all 501c3 organizations, to submit their audit review or 990 and a filing fee annually. It's due similar to the 990. It has an automatic extension until the 11th month. So 11/15 for calendar years, June 15th for fiscal year filers. All right. I'm sure you guys are tired of hearing me talk. Let's have some questions. Does anybody have any specific questions? Let me see if I can. Here we go. Oh, you have to have questions.
You did a great job.
Oh, good.
That was a fantastic presentation.
Oh, good. I get so nervous. Does that come through, like how nervous I am? No.
It
Good.
didn't.
Poker face.
You did great.
Yeah.
Okay.
Do you want to talk about what was the question that I was? All right, it's gone. Oh my gosh.
It happens. It'll come back to you.
Oh, I know what it is. So one of the things that we do with our audit firm, so we've changed auditors every few years so that we get a more independent, look at the financials. And if we're going to go longer than a few years, we ask our audit firm to change the accountants.
Yep.
So don't send the same people to do the field work. Don't have the same people, leading the audit. Sometimes they've pulled in a partner, to lead, every 2 or 3 years or something. But do you want to speak to, because a lot of organizations just use the same firm and they use the same person?
Best practices, absolutely. So the best practice is every 3 to 5 years to change auditors. And we try and do that here internally. So what you were alluding to is called partner or staff rotation. So a lot of efficiencies are gained by having the same audit firm, right? Especially if you have any kind of complicated accounting. But those efficiencies aren't lost if you do rotation within the same firm. But it is best practice to do every 3 to 5 years. And I'm a firm believer in it, and I'm an audit partner. You want to keep clients a long time, but you also do get more comfortable the longer you're with a client. You accept their answers. I think you challenge people a little bit less than you would if you were a first year and you're like, that doesn't make sense. And so, yes, that's a great best practice. Every 3 to 5 years, put it out to bid. It keeps everybody honest. It also keeps your board involved, I think, in the process. Kim, don't you think? I think, making them make a decision and making them understand why it's important that their auditors be independent.
Mm-hmm. Yeah, and we've even recommended to our board that we could change. Sometimes we've had bookkeepers that they move out of the area, you know, or whatever. So we can say, well, do you want to consider using this firm as a bookkeeping firm for a couple of years and now go to a new audit firm, so that you somehow keep, you know, that old firm, because they then know how your accounting should run. Especially when they have to send you, if you end up with a lot of journal adjustments.
Yes, you know, when I do presentations, gosh, you know, we have a lot of audits, so, and a lot of not-for-profit audits. It is what I love, because truly, I'm just a sucker. I like the causes. I like that people are helping people. We have a whole different department for the for-profits who are just in it to make money. But yeah, so when I meet with those boards, that's one of the things I highlight. Kim, it's great. Are you having to have a lot of journal entries? And if you are, then you're with the wrong bookkeeper, because, you know, they should be able to get your books and records internally that you're looking at month to month accurate. And so there should not be a significant amount of entries at the end of the year. And so that's one thing I stress. If we have to make more than just a handful, and if they're not like sort of year-end adjustments, we do kind of call them out on that, even if it's a bookkeeper we know, because that means either they're being lazy, right, and they just didn't do it, or you're not looking at good numbers throughout the year, and that means you could be making bad decisions, right? I mean, so, you know, if you're making a decision based off of, you know, your March numbers looked terrible, but you ended the year up, well, what happened? Like, what, you know, because you're not getting a lot of contributions in April and May, let's be honest. That's not the highest level of giving for anybody. And so, yeah, we do bookkeeping. I think most everybody does bookkeeping. We have a lot of bookkeeping firms that we work with. I'm sure Kim can tell you all this as well, but some are better than others. Sometimes with bookkeeping, you get what you pay for. You know, there's a lot of things in life. You know, when you're 20, you buy IKEA furniture, and when you're 40, you buy furniture that comes delivered by delivery men that you don't have to put together, right? I will never, ever buy another bookshelf I have to put together. I think a lot of not-for-profit organizations, because, you know, costs is important. You guys are not raising money to pay accountants. But if you're paying somebody $20 an hour to do, you know, pretty significant accounting work, you're going to get what you pay for out of that. So, you know, if you ever need a referral, we do bookkeeping, but a lot of the times we're, you know, you have to be independent to do an audit. So we do tend to do more audits than bookkeeping. So if we have the opportunity to do the audit, we refer you to a bookkeeper. But there are some really good ones out there for reasonable rates. But it makes a huge difference, I think, to have a good bookkeeper. Thanks, Kim. We're close. Anybody else have any specific to their organization? So Emily, you were from Volunteer Fairfax.
Right. Yeah. So we're from Fairfax, Virginia, and I somehow, probably through Nonprofit Village, got the information. So I really appreciate the presentation. I had one kind of random question.
Hit me with it.
So we haven't had an issue in a very long time with our audit. I've been with the organization for 20 plus years, but I do recall with previous executive directors, sometimes their understanding of the audit process and the 990 and all those things, they had lots of questions. And I think it's on the 990 that, maybe it's in the audit, that you have to verify that you haven't asked other auditors for information. And I'm just wondering, like, where do you go to for good information like this, which is kind of educational from a nonprofit basis, like on a regular, like if we had questions about specific things on the 990 or something like that.
That you couldn't ask your current auditors?
Well, and maybe it's you ask your current auditor. Is that kind of the first place you go if you ever?
I would, yeah. So, you know, I get it periodically, but I think it would be an excellent opportunity. And I'm always marketing, right? Like, because that's what we do. We're always out there marketing. But it's an excellent opportunity for your current auditors to come in and for you to have a board training on this. I know I was on the board of Mental Health Association of Frederick County for a very long time, and they're a wonderful organization, and that's how I learned to be a good board member. They did some fantastic things, but every board meeting there was like a 10-minute training session on things that, you know, I'm an accountant, so I get the 990, but I certainly don't understand how a call center works. And so, you know, the suicide hotline that they ran, they would give us a 10-minute once a year. You know, they had different categories of things. Emily, I think, and again, I say this because I'm an accountant, but I think the Irs Form 990 is important enough that, you know, have your auditor come in and do a 10-minute training. Of course, it couldn't be me because I can't talk in less than an hour, but.
No,
You
I
know.
think that's a great suggestion. I know they come and they present our audit, but I think doing a training at some point would be fantastic. That's a great suggestion.
Okay, good. Yeah, I think, you know, from a board member perspective, because I was also a board member, that was really helpful to me in any area that was not my wheelhouse, right? Like, so I get the accounting side of things, and the lawyers get the lawyer side of things, and the IT guys get that. But, you know, the nuts and bolts of things that we don't deal with every day, it was nice. And to be able to ask questions, because I think board members sometimes are afraid to ask questions. So if there's, you know, somebody who can, but that's where I'd start. And then Nonprofit Village, I think, is, you know, I'm sure there are other organizations, but this kind of training that they have available throughout. Kim, do you guys have a committee that helps with deciding what events you're putting on in the chambers? I mean, I love the chamber events because they're HR related, you know, things that I have to deal with, but that I'm not good at. So, and they're generally free.
Yeah, we have, so our board is involved with major things like, you know, our awards event or whatever. Our regular programs, we report to the board every month what new programs we're proposing, how they're going to get paid for, are they fully contained, you know, do they pay for themselves, that kind of thing. They leave it to us when it's routine day-to-day work, programs that are day-to-day. They don't want to get involved in that, and I'm happy about that. But
Sure.
they're there for expertise, and we can always call somebody on the board to say, we need your expertise. We need to be, yeah. And then obviously we have other community partners that we will pull together too.
Yeah, so hopefully, Emily, that answered your question.
Yes, thank you so much.
You're welcome.
Okay, that was fantastic. That wraps up our hour. So Eva, thank you so much. It was fantastic, and yay.
Yes,
Thank you,
thank you
Eva.
guys.
It was really very helpful.
Thank you guys. And you know what I realized? I didn't put my email anywhere. If you guys have any questions at all, feel free to email me. It's EWEB